Hi guys, and welcome to our weekly outlook video. So we are going to look at dollar, fiber, USD Jpy, and cable. Then I'm also gonna highlight to you some pairs that we should be looking out for selling opportunities in them in the coming few weeks. But the main focus on this outlook is dollar and euro USD. Of course, we are going to link up the yen and the pound to that same analysis. So yeah, as you all know, Monday is a very important day for us to frame our weekly trades. Now, today was a holiday in America. It was Memorial Day, and UK also, they had a holiday there. I don't know which one it is, but be that as it may, I'm sure you have seen how there was low volume in the market all the way from Asian Open to mid-session of London Open. Now, prior to New York Open, there was an influx of liquidity in the market. That's why you see this bearish move to the downside on dollar. It moved roughly about 20 or so pips after ranging since market open, after ranging for just like 9 pips only. So now when we look at that in terms of our analysis, where the market is likely to go, so you can see we have taken out all the sell stops below 89. Now if you're in the mentorship, I'm gonna come back to this chart. If you're in the mentorship, I shared this screen yesterday with you guys and I highlighted the sell stops. So that's these ones, they are sell stops, but it's internal range liquidity. We've got buy stops above here. This is external range because this one is inside the range. We've got sell stops. These are external liquidity. So now we have seen that price has traded past 89.89. That means it has taken out all the sell stops. Now if we come to a daily chart, you can see price is rebalancing. There's a fair value gap in there which has now been rebalanced. Now what do we need in terms of bias, or in terms of the structure, for us to really be sure that okay, the bears might be in control in dollar? What do we need? We need a clear close below 89.50. A clear higher time frame close below 89.50 signals that bears might be back in dollar. But as it is, I'm expecting higher prices in dollar index. Now this has to be supported by our intermarket analysis, by our COT report, by the bond market. You can see there was a huge sell-off today, I think, in the bond market, if I'm not mistaken. There was a huge sell-off, and the fact that New York closing early, then there was prior to it was bound to happen that we could see a spike in either the upside or the downside, which is what we saw heading into New York Open at 1400 hours. Now what do we need for price to move higher? Right, we've got buy stops, right? We've got buy stops above here, and there's a fair value gap right here on our daily time frame, and we've got buy stops also above 90.90, right? We have buy stops above 90.43 and buy stops above 90.90. Those are your targets for a bullish dollar. Now I'm just gonna go to the CFTC report so that we we get another side of the story regarding the COT numbers on what are the huge traders holding, what are they saying in regards to dollar index. So that means we need to go to ICE futures for the US market. We're just going to go to the short format, which is what we look at, and we need to look at dollar. Right, so here's the US dollar index. These are the futures positions as of 25 May 2021. Now we're going to capture these positions quickly. So remember, this is now a weekly routine. You have to do this for the next coming 12 to 15 weeks so that you get an understanding of how to use the COT report together with your technical analysis. So now when we look at the COT report for the US dollar index, we've got the non-commercials. Long term, they are holding 27,488. 27,488. So they've increased their long exposure. Excuse me. They've increased their long exposure, and their short exposure is standing in at 24,708. 24,708. They've also increased their long exposure. Now we need to look at the commercials for us to have a more comparative number, right? Now the commercials, they are holding 5,413, 5,413. They've also increased their long exposure, not by much, just a few hundreds. Same applies with the non-commercials, just a few hundreds to the upside, a few hundreds to the downside. Now the commercials short positions, they are holding 10,803, 10,803. Now you can see that the commercials have taken profit on their short exposure, and our open interest on dollar is standing in at 43,043. 43,043. They've increased. Open interest has increased by just about 48 points. Now that's not much. That doesn't signify having a very explosive move coming into the dollar. So we might see, when we look at the chart, we could see dollar in this week. We could see, right, let me go to the weekly chart. We could see dollar ranging a bit around the 90 zone, the 90, between the 90 and the 8980, that zone there. We could see dollar playing around that price range in this week. But now when you look at price action, guys, you see last week's candle, that's a clear bias change. This candle here signifies a change in market structure sometime soon in dollar, and in that case we've already taken out the sell stops below 89.63. we get the correct number there, 89.63. We've taken them out here. So for us to have a clear confirmation that dollar is bullish, we don't want to see price trading below 89.515. Take note, 81.515. The moment we see dollar trading below that, then we know that the bears, they are still in control. But as it is, we've got a reversal pattern forming on dollar right now. We've got a reversal pattern. Yes, today the market was closed, so today's price action might not be a true representation of what the market is telling us. So as of this week, I'm looking to be a long trader with a target set at 90.80, right? That's where the target is on dollar index. Now in terms of entry points, right, 89.600 is an ideal area 89.600 is an ideal area for long trades. If you are going to take long trades at current price, make sure your stop is below, and let's just highlight that. Make sure your stop is below 89.50, right? Because there's a likelihood that market can keep going to the downside before it trades higher. So now 89.600, which is the same price we were looking at from last week, that is an ideal zone for you to be a bullish trader on dollar index. So now you can see all this is happening inside our monthly bullish order block. Yes, it's going to take a bit of time. There's a fight going on right now between the sellers and the buyers, right? But looking at higher time frame, we are in this monthly bullish order block, which I anticipate price to find support, right? Price is likely to find support in this range here, and you can see we're just below our 79% retracement level of the swing point here. Swing low, swing high, meaning price is now in discount. It's actually cheaper to be a buyer in dollar index. Long term wise, your stop should be below 89.16 and looking at a first target of 93.50, right? That would be your first profit scaling range. So yeah, in the coming week, I'm looking for long opportunities on dollar index. These two equal highs here, can you see they're too clean? They are way too clean, and it's inside fair value gap. So expect price to move to the upside. Expect price to move to the upside. So I'll be highlighting in the group, guys, the mentorship group. I'll be highlighting in the group as we see how price reacts after the holiday. Remember, you must always be careful not to trade during the holiday, because it's not a true representation of the volume in the market. So now coming to EURUSD. I'm expecting price to trade right back into our mean threshold of our bearish order block, which is 1.22426. Then price should find resistance in here. Price should find resistance. Now we're gonna look at the COT number for euro quickly. So now we need to go to Chicago Mercantile Exchange so that we get other ideas on what we might have missed out, right? So the euro futures positions, the non-commercials. Okay, let me go to my Excel. I need to copy that, come to euro, and we paste that. So the non-commercials for euro futures, they are holding a total of 236,103 longs. So that's 236,103. 236,103. Right, they've increased their long exposure, and their short exposure is standing in at 132,103. 132,103. They've taken profit on their shorts. Now when we come to the commercials, right, the commercials, they are holding 381,869. 381,869. They've also massively increased their long exposure. Now short term, they are holding 561,735. 561,735. They've also increased their short exposure. Right here, they've increased their long exposure by a couple of, just above 3,000, and short exposure, they are looking at an increase of about 10,000 positions. Right now, open interest is sitting at 738,1 138. 738,138. That's open interest. Open interest is increased by 10,000. There's bound to be a huge move coming on fiber, and I'll be anticipating that move to come in after the market has taken out the sell stops above. Let me go to my chart here. The sell stops above this range here. The buy stops, sorry, that's the buy stops above 1.22657, right, which is just above our mean threshold. Now this price action, guys, see this, that is crucial, right? You can see that right now euro is in premium range, right? It's in the range where you can take shorts, but you don't want to see it closing above here, right? The moment it closes above here, then you know the bulls, they are still in control. When it closes above 1.22664, then you know that the price could keep going to the upside, targeting 1.23500 level. But this manipulation here, this stop hand which happened here, we don't want to see price trading above for a clear move to the downside, right? We will need price to stay below 1.22664 for a clear bias to the downside. So 1.22426 is your ideal entry for short trades on Euro USD. You can see the non-commercials since the 6th of April, they have been increasing their short exposure, right? And bits in pieces, we are seeing huge moves to the downside. See, we are seeing huge moves to the downside, correction, and then another move to the downside. The moment we trade and close, say, below this price point here, these two equal lows, they are too clean. Price is likely to go for those sell stops. Now that will be your short trade. So shorts are ideal on Euro USD. Yes, I know many people, they are buying Euro USD, but my bias is telling me that we should be looking for selling opportunities on Euro. If you look at the monthly chart, you can see price is in our monthly bullish order block, right? Price is in a monthly bearish order block, and it's bound to find resistance. You see this structure here, this structure here. This is where we need price to stay below 123,500. The moment we close above 123,500, then we are going all the way up to 125,600 on Euro. But for now, shorts are ideal on Euro USD. You can see how momentum is dying on the weekly chart. I won't be surprised to see this week, which has opened, closing bearish. I won't be surprised about that. Now let's come to pound, right? Let's look at pound quickly, and then we come to our COT report, right? British pound sterling futures only position as of 25 May. Now long exposure is sitting at 64193. 64193. You can see the non-commercials, they are leaning to the upside more, right? Yes, you cannot ignore that, right? But we all know that the commercials, they hedge against the non-commercials, and short positions, they are holding 33534. 33534. They've taken profit, a huge chunk of profit on their short exposure. Now the commercials, they are holding 63058. 63058. They've also taken profit on their longs, right? These are the commercials. In short positions, they're holding 113248. 113248. 8. They've increased their short exposure, and open interest is sitting at 169,372. 169,372. Open interest has decreased. You see, open interest has decreased by 3,774. Now, when open interest decreases, what does that mean? What does it signal? You see, what do we need to look out for when open interest decrease, right? So when open interest declines, it is an indication that commercial traders are reducing their net short positions, right? It means they are reducing their net short positions. Now, when we come to the chart, right, for pound, when we come to the chart for pound, from a monthly point of view, you can see we are now trading above our bullish order block. Bearish order block, sorry. This is a bearish order block. Price is now trading above the bearish order block, right? Meaning there's now a clear structure that is broken to the upside. Now we have another bearish order block here, right? You see, now this is a new structure that I'm marking on pound. My old structure is now invalidated. We've got a huge liquidity void here, which was respected here. Then price has traded above. Now, when you look at this structure here, we also have buy stops here. And that's where price is sitting at this moment in time. Price is sitting right there. Now, I'm going to go to a weekly chart. Let me just correct this. So 5. Let's just go 6. Right. So we've got buy stops above. Let me mark this price point, guys, just a minute. I need to mark this one. So we've got buy stops above 1.42400. There's buy stops there, which needs to be cleared. And you can see on the weekly chart, can you see how the momentum is dying? There's no more momentum for price to keep pushing to the upside. And we are trading inside the daily rejection block, right? If I come to the daily chart, zoom out, right? You can see price is inside the rejection block. So now what you need to see on pound, expect this price action, price to trade above. The moment it closes below, then you should be a what? A short trader, right? You should be looking for short. So the number to look out for on British pound is 1.42400, right? 1.42400. You need price to take out this high and this high. There's buy stops above there. See, we have buy stops. Right. We've got buy stops above 1.42400. Now expect price to take out that. That looks guaranteed. We could see a clear close, and that's like 43 pips available, right? But in terms of higher time frame buyers, we should be looking for selling opportunities only after price has taken out this liquidity area. Let me just try to get this thing out here. I just need to get this out of the way. So we've got price in a higher time frame rejection zone, and you can see how this level is being respected. You see this level, the 1.42200. Price is respecting that zone. Each time it's coming, you see here we had a market manipulation here, buy stops cleared, price fell. We retested it, came back into premium, sell off, came back into premium, sell off. So we could see another sell off back to 141,500. Now if you come to that structure which we talked about, guys, in the mentorship, if you come here, right, you see 1.42330, 1.42330. Now this is a more precise analysis that we did in the group. If you're not in the mentorship group, you might not understand what you're talking about. This area here, expect price to trade through it, right? Or these two equal highs, this high and this high. Expect price to take them out before we see a market sell off, right? Before we see price trading to the downside. Why does price need to take out this? Because there's money there, there's liquidity. You see, buy stops, sell stops, supply and demand. That's this whole pattern of the market. Without that, without willing buyers, without willing sellers, remember, the market is not gonna go anywhere. Finally, we're going to look at USD JPY, right? Let's look at USD JPY quickly. Now we need to come to our COT report. Now we need the yen. Now yen, the first one, Japanese yen futures only positions as of 25 April. The non-commercials, they are holding 24163, 24163 longs, and then short positions, they're holding 74319, 74319. So you can see they've taken profit on their long exposure, and they've also taken huge chunk of profit on their short exposure. When I say they've taken profit, you know, guys, it means they didn't increase their positions, they've actually reduced them. What happens to the ones that they've reduced? It means it's profit taking. Now when we come to the commercials, they're holding 107,377, 107,377. They've taken profit on their long exposure, not by much, just a few points. Then short exposure, they're looking at 46024, 46024. They've increased their short exposure. Now you can see that this data is telling us the opposite in terms of dollar, right? When we are expecting dollar to trade higher, USDJPY also trades to the upside. But now we didn't get any increase in long exposure, we only get an increase in short exposure. Now when we come to the chart, right, now this is where it becomes interesting. Now remember the explosive move that we saw, the expansion that we saw last week on USDJPY. I think Simba in the group highlighted that. You see this move which originated from our entry zone of last week. Remember last week we took an entry position from 108,645 all the way to the upside to 109.80. Now that was a very huge move in terms of movements on USDJPY. Now we've seen an increase. The commercials, they've increased their short exposure. Now where is price likely going to go, right? Now we are likely to see price filling up this fair value gap here, right? Now we have a new point of reference in terms of our swing structure. We've got a new high, right, that has been formed. from last week Friday. Now we've got this fair value gap here, liquidity void, fair value gap, and price is now, price will be in equilibrium once it gets there, to be in equilibrium. So any price point between equilibrium and 70% level, that's a discount range, you see. So expect USDJPY to trade lower, right? 109.0.5, 109.050, sorry, 109.050, a good entry to the upside, or 109, 108, 108.889, a good entry to the upside with your stop below this low here, or below 108.34.3, right? So this is what I'm expecting on the yen. Yes, we have seen a huge increase in short exposure from the commercials, right? We have seen a huge increase, but when you look at the non-commercials, they've also reduced their short exposure, they've reduced their long exposure. Then commercials, they've reduced their long exposure, they've increased their short exposure, meaning there is leverage, there is room for yen to move to the downside. You see 108.889, 108.889, that's this, the opening price of this daily bullish order block. So expect price to find resistance once it trades in here, right? There's a fair value gap which it has to close. Once that gap is closed, you see we've got a bullish order block here, right? This bullish order block, is opening price is at okay, let me just try to get that pop up to show. It's opening at 109.155 and its low is coming in at 109. So you're looking at 109.050 as your ideal entry to the upside on USD JPY. Now finally, right, finally there's pairs that I gave you guys in the mentorship. There's pairs that I highlighted to you. Now if long term wise we are looking for a strong dollar, right, which has not been confirmed yet, but we expect this range to hold up. Now remember, this is the close of the month, so we've got a new monthly candle forming tomorrow. The moment we get a strong dollar, guys, when you look at pairs like CHF JPY, Euro GBP, right, Euro CAD, Euro AUD, Euro NZD, GBP CAD, GBP NZD, GBP AUD, AUD NZD, right, and AUD CAD. You see these pairs, right? You get the same example that I'm giving you is how we traded AUD CAD the past 2 months. Remember, we sold this guy in March and it has moved massively, I think 400 something pips. The same principle, institutional sponsorship in a strong dollar, right? The same principle is what we will be using on these pairs, right? When we get a clear confirmation that dollar is bullish, we're going to be looking for a lower interest rate country versus a higher interest rate country, and we'll be looking to sell, right? We'll be looking for shorting opportunities. Now this requires dollar to give us a clear reversal pattern, which by end of this week we are going to get whether the market is reversing on dollar or we are getting a continuous run to the downside. So yeah, those pairs that I've gave you guys, make sure you take note. I'm not saying you must trade all of them, right? But what I'm saying is look at those pairs, look at the ones that are right in premium range, the ones that are testing the premium areas for you to be a short seller. Then you can swing that asset once you get a confirmation that dollar is reversing to the upside. As it is, dollar is in that phase where we could see a potential reversal to the upside back to 93.50. So yeah, this is what I wanted to share with you guys, and I'll be highlighting more levels in the group as the week goes by, especially tomorrow, because today's market price action is not a clear representation of the volume, so we might get huge gaps when the new month opens. So yeah, if you're not in the mentorship group, you're only gonna see this video probably Wednesday afternoon or Thursday morning, and if you want to receive the videos Monday evening, then just get in touch with us, join our mentorship group, and then we'll help you to improve your market analysis. So yeah, if you haven't subscribed, guys, just subscribe to the channel and make sure the notification icon is selected so that you don't miss any other uploads that I put on the group. So yeah, that's pretty much about it for this week, guys. It's going to be a bit of a tricky week. Take note, it's going to be a bit of a tricky week because it's the beginning of the month. It's not gonna be like last week where we got all the positions right to the pip. So you must be very patient with price. So with that, guys, I wish you good luck and happy trading. Thank you.